Good morning, traders. It's Thursday, October 24th. Taking a look at the charts, we have equities are up this morning. We're seeing the NASDAQ up almost 1%, SP 500 up 0.5%, the Russell up 0.4. The Dow is down. Not sure why the Dow is down. There must be a big stock down there. But yesterday we did see some pretty big panic selling in the market. If we look at the 30-minute chart of the SP 500, and we can see this lime green area here, this is telling us the market sold off a little too fast, too quickly. It also came down to this pink line, which is, if we zoom into the daily chart, it's also the 20-day moving average carried over to this 30-minute chart. The 20-day naturally acts as a support level, plus we're oversold, and we had panic selling on our our panic selling indicator over our 3 ratio. And typically, that can signal a market pivot low in the market. If we get too much of this, it will change the trend. So we definitely need to see some traction. Yesterday, when we look at the volume on the 10-minute chart down here, we had a big sell-off yesterday. Lots of volume compared to volume on normal days. So there was definitely a big movement, hence the reason why we see panic. People were panicking and running from the stock market. At the end of the day, looks like we had just an oversold bounce and people covering their shorts and people getting back in. And of course, the market has been drifting higher. So hopefully we'll get traction and see this market go up. But I'm not a fan of the market gapping higher. It is set to gap higher. If we take a look at, let's take a look at the QQQ and look at the 10-minute chart. This chart here, I haven't talked about price spikes in a while. So we've got these spikes that happen usually in pre-market. And I have these lines that come across. Typically, once we have a price spike, we're going to naturally see the market want to come down and tag one or all of these levels. This is like a third, the 50% move, and 100% move of the spike level. So if we have a spike down in pre-market, usually in the next 24 hours or same day, we're going to see price come down and hit these levels, at least one of them. And you can see how they kind of happen over and over. We had another spike right here in pre-market of 3 days ago. And of course, the market ran up, hit those spike levels. We had one 2 days ago, another spike up. The market opened, ran up, and hit those spike levels. We had another little one here. And of course, we have one this morning. And of course, this morning is going to be a gap higher. So the market closed right here. Whoops. Ended up closing right here. So we got a pretty big gap, and the spike obviously comes down. You can see these bars. So anticipate the market to potentially sell back down and fill that morning gap. But we'll see how, if it does fill that gap, which is not a bad thing. We want the gaps to get filled. Then the market can go higher. So we'll see how that unfolds going forward. Overall, if we take a look at the general where money's flowing today, is flowing into stocks, it's flowing into bonds, it's flowing into gold, silver, and oil. So yesterday was like the opposite. For some reason, money was flowing out of the markets and just really going to cash. There not a whole lot really went up yesterday. Today, we're seeing things start to move higher. If we take a look at bonds, it looks like 830 just hit. So we actually have bonds starting to move down. Let me just take a look at TLT here in pre-market. So bonds are just starting to move down a little bit. If we look over at gold, gold has come up and hit that level that we've been talking about for a long time, 2750. We're hitting that level, and it doesn't mean it's the end of the move, but it definitely means the measured move has been done. So whatever happens now is kind of icing on the cake in terms of if this market wants to continue to go higher. But this is the measured move we've had for years, really. This goes all the way back to 2003, this pattern and this target. And of course, it also is multiple other time frames that actually come to the same price. So this is definitely a really critical level. I'm going to expect we're going to see lots of volatility. Typically near the end of a trend is when we start to see some of the biggest whipsaw moves. Could spike up, could sell down. It could get really noisy in here. And overall, when you look at the big picture, this would be like more so just a major topping phase. So expect gold and precious metals and all that to get pretty explosive and huge rallies, big sell-offs, a lot of noise, and the trend to this area, that move, that easy money kind of play is over. Now the market needs to digest. A pullback, usually pullbacks in an uptrend in the stock market are very sharp. Let's just go back to the SP 500, for example. Typically, you're going to have in the grand scheme of things, it's not that big of a pullback. Like if we just look at this little red bar here and this little pullback, I mean, we had it here. We had one like 5 times bigger here, 20 times bigger here. We have it over and over, these little red bars. So this is, if yesterday got you all worked up, it just shows how overly zoomed in and how sensitive you are to the markets. This little tiny pullback is, I mean, we did it like, 30 times through here. So it is totally normal. And if you felt extra sensitive, then it just shows you're way too tuned into this market. You need to sit back and let this trend move. And it's down at a support level. It's hopefully going to find some support and move higher. We just have to let it do what it's going to do. There's no point worrying about it because there's nothing you can do about it other than we just manage our positions. If a stop gets hit, we get out. If it finds support and keeps rallying, then we ride it just like we did with this trade here. We got in over here and we had a ton of these sharp pullbacks along the way. And in the grand scheme of things, they're not that sharp. Just keeps bouncing up the 20-day moving average. It can do that for months. So just try to sit back and relax. Just know you will give back some gains at some point. We will get stopped out. It's part of the game. And once you've accepted that, then trading doesn't become nearly as stressful. We're not going to, it's just the way it is. Overall, that's kind of about it at this point. If we take a look at the overall trends, we are continuing to move higher with the CGS strategy. We still have orange bars on our sentiment chart. So orange generally tells us that people are really nervous. They're betting on the downside. They're expecting the market to fall. And that is typically seen as a good thing because the market usually goes the opposite way. So this is telling us people are scared, they're dumping their shares, and the price is still holding up. So the shares are going into the hands of investors who are willing to hold through this wave, and they're soaking up all that selling pressure. And of course, red bars typically tell us people are freaking out and totally dumping shares and getting out and betting against the market in a big way, expecting a collapse. And of course, that's when you get some of the biggest moves to the upside. So we're still looking pretty. The market definitely isn't as strong as I'd like it to be, but again, it is trending higher and everything is still in our favor. It's just we're gotta let the market do its thing. So other than that, that's about it for now, and we'll talk to you soon. Bye-bye.